Bitcoin, when we were on the air, was trading about 110K, down from its 112K high. But again, in the Trends Journal, whoop, we said it. Yeah, Trump is, when he said there's going to be the crypto, we're going to lead the world in it. Yep. But when go back a couple of years ago, hey, Bitcoin's destroying his dollar. I don't like it. Yeah, but now the crypto club gave him all the money. His family's in it. The Lutnicks, the Witkoffs, the this ones, the Jerkoffs. They're all in the club. You're going to see the numbers keep going higher. And gold was down $41, but it's still $3,300 an ounce, down from its high, but still high up there.
In today's news recap, ECB looks at gold investments. Commerzbank. Gold is in high demand as a safe haven. This is all the more true these days as other supposed safe havens, such as the US dollar and/or US government bonds, have lost their appeal due to the erratic policies of the U.S. government under President Donald Trump. Commerzbank's commodity analyst Barbara Lambrecht notes, USD and U.S. GovT bonds lose their safe haven appeal. The ECB has also recently addressed the question of what the record-breaking gold market is saying about risk perception on the financial markets. The attractiveness of investing in gold in uncertain times also lies in the fact that there is no counterparty risk when gold is held in physical form, while supply is limited and inelastic, which preserves gold's intrinsic value. The ECB notes that investors have recently shown a strong preference for gold futures with physical delivery. As a result, gold holdings on the COMEX have risen sharply, according to Bloomberg figures from the beginning of December to the beginning of April, by 150% to a new record high of 45 million ounces. Investors in the Eurozone are also exposed to gold through derivatives. Their gross notional value has risen by 58% since last November to 1 trillion euros at the end of March. A significant portion of this is OTC transactions, which always carry heightened risks of counterparty default. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
It's like at the markets. Hey, woo, Madonna me. The markets went up so bigger today. Well, let's see. Stocks rally. This is the language of CNBC. After President Donald Trump said over the holiday weekend that he agreed to delay the tariffs of 50% on the European Union. Every fucking day, every fucking week, every fucking month, I say one thing and then I do another thing. Do you know who I am? I'm full of shit. The president. I'm like every other president, full of shit. Hey, I'm the Nobel Peace of Crap Prize president, Barack Obama. Oh, yeah, a little Pritzker boy, a little fucking nothing from Illinois. Yeah. Or that guy on Oprah. She never supported anybody but him. Never talked about a president to support. He was going to be a peace candidate. Hey, as soon as I get elected, the Afghan troop surge. Yeah, you forgot that with that guy Petraeus, that arrogant clown. Oh, yeah, we're going to beat them Afghans. You're going to win. Yeah. Oh, the Obama that got rid of Gaddafi, that destroyed Libya. I forgot, at least Syria. Again, one piece of shit after another. So going on to the markets, the Dow went up over 740 points, S&P 2.05%, NASDAQ almost 2.5%. Yep, because Trump backtracked on his 50% tariffs on European products. The Dow was down 2% last week, the markets. The S&P 500, NASDAQ, all slid. Yep. quick reversal. Every fucking day, a different thing. And Brent crude prices are down because OPEC says we're going to pump more oil out there because we need the dough, because the global economy is slowing down. They ain't buying enough and we need the money. But what's going on with the Iran-American talks?
In today's news recap, Citi bullish on gold, Americans purchase hit record high. Citi, the American multinational lender, reaffirmed its short-term gold price target at $3,500 an ounce, citing the recent increase in tariffs and significant geopolitical risks. According to a note released on Sunday, the bank raised its estimate of gold prices from $3,000 to $3,300 per ounce to a range of $3,100 to $3,500 per ounce. The U.S. bank maintains its long-term cautious approach to gold despite the upgrade. The bank cites two main explanations: the potential for growth and associated equity risks diminishing as U.S. households now own more gold than they had in 50 years. The Federal Reserve lowers interest rates, and the midterm elections draw near. The short-term price targets for palladium and platinum remain $1,050 and $900 per ounce, respectively. Citi believes that a sustained upward trend requires a genuine improvement in end-use demand, and the recent platinum rally is viewed as headline-driven. The palladium rally represents yet another opportunity, according to the bank. Citi has maintained a bullish outlook on gold, initially increasing its target price to $3,500 per ounce in April 2025. On April 22nd, concerns about the Federal Reserve's independence caused the price of gold to surpass its previous record. Citi called for a period of consolidation for gold prices as trade tensions began to de-escalate and lowered its short-term target to $3,150 per ounce, which was reached on May 15th. In the second half of 2025, Citi predicts that gold prices will continue to stabilize at their current levels. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics Handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
And the economic update. Again, Trump keeps changing his mind. And we have a very, very important article in here about the office building bust coming that no one else is talking about. When you're looking at your vacancy rates, your occupancy rates, and there's going to be failures on these loans. And we do a lot of articles in this Trends Journal to support that, because there a lot of these owners of these commercial real estate, they're getting loans from anywhere they can to keep propping this up. This is another example of the panic of '08. Back then, they had subprime mortgages. Hey, you don't got a job. You're deep in debt. Don't worry about it. Sign over here. You can buy a house. I'm a bankster. Yeah, they gave us that one. Home sales were down in April. Do you know what the median price of a house is in the United States? It went up 53%. 53% since politicians gave us the COVID war. Stay home. Here's cheap money. Interest rates, zero. Hey, some company will bring them down to negative. They artificially propped this thing up. And remember how they lied and said there was no inflation. It was only transitory. It was only temporary. Yep. Yeah. Before the COVID war, the office vacancy rate was 11.4%. Yep. And now you're looking at around 20%. This is serious stuff. 20.4%. Double. There's going to be failures. You had 3 banks that went bust back in, was it 2023? Silicon Conman Valley Bank, Signature Bank, First Republic, brought down the equity markets, gold spike. 3 banks, you're going to see maybe 30 to 300. So that's just some of what you have in your economic update. And again, where it goes, nobody knows. Round and round it goes because Trump keeps changing by the second. You don't know what he's going to do, what he's going to say. The numbers came up today. The Conference Board Consumer Confidence Index was up. But again, we don't see this as a big deal because people are running out of dough. When you look at the facts, the jobs that are being created are very low paying, and the new jobs, they're in healthcare services and retail service sector. So it's very serious what's going on.
What do you think of Celente's take? Is he spot on? Do you agree with him? Post in the comments section down below your honest opinion and share with the stackers if you have an exit plan to sell your gold and silver, or if, on the contrary, you won't sell your stack no matter what. Subscribe if you have not yet done so. And check this video right here because it's a perfect fit for you. I'll see you on the other side.